Hi, welcome to the Market Alert for Monday, the 2nd of November 2015. Before we have a look at the markets, the first thing we need to do, as I mentioned in last Monday's Market Alert, is to actually change the primary trade times to be in sync with the US, because this last weekend they actually went from daylight savings time, and therefore we need to just change the primary trade times within the software. Now, if you've got your workspace open, then it's just a simple matter of coming down to settings, primary trade times, and we're going to increase each one by an hour. And when you've changed period 1, period 2 by an hour going forward an hour, we're then going to left click on apply. You can see that the grey shaded areas have now moved, and what we need to do for this to take effect and move the signals, because obviously they will change, because obviously the trading times change, so these will move along, disappear, and again, so if you're looking at the market alert, and you've already changed the times in your software, they're not going to match. And therefore what I've done is actually done a recording of Friday's trades so that you can see what was actually there. So if you're going to change the trade times before you watch the rest of the market alert, then you'll see these actually change. So I'm just going to do that now. You need to come up to File, Save, Workspace as well for this to take effect, and then we're just going to actually close the software there. So now we're going to relaunch the software and then open the workspace, save workspace. So now the charts are all loaded, and you can see there the signals look completely different, and that's because we've gone back, well, forward an hour and the US back an hour, so they do alter within the software. So again, it's just a case of everything will be out for last week by an hour on the actual signals the week before, and of course the last 6 months will be back to normal on the signals as well. So it's just one of those things, unfortunately, where we get this difference between the hour for 1 week or 2 weeks depending on the time of year. Okay, so that's all sorted. That's how you make sure that your workspace is now in sync with the US, having dropped the daylight savings for the next 6 months. Let's move on and have a look at Friday's trading session, and we'll do that having a look at it in real time, captured video recorded for today's market alert. So the market put in a buy signal at 14.20. It wasn't filled. This was followed by a short sell at 14.25, which was actually hit. You can see the entry price being hit there, but the market traded sideways, and then we had another buy signal come in here, which you'll just see. There you go, another buy signal in there, and if we just fast forward, you'll see that was actually hit, and therefore taking it out the sell side. So the loss on this trade was 14 points as the market actually reversed. So the market went short in this bar here, and then it switched to a buy with this one here, and then the market moved higher. So then prices got stuck into a sideways range, and as I said in Friday's market alert, if you have losing trades or it's quiet in the first part of the session, then generally you will make it up in the second part of the trading session, because the law of averages mainly will take care of that. But you've got to continue to trade through, even though it's a Friday, where normally if you've had profits in the first part of the Friday session, then you get nothing in the evening session or in the second part. But as you'll see, as this unfolds here, the market actually came back down and took out this trade with a loss, and a very narrow range, which can only mean one thing, that prices are likely to move in the second part of the session, which as we fast forward through, you will see that's precisely what they did. So now we've got a few signals here. We'll go to the one where it was actually filled, and here you can see the market now coming down and filling the sell signal there at 18.10. Market then qualifying, and then price is starting to move lower. So as we fast forward through, we get to the scalp line, You see the market just coming down and hitting that at 17,749. That's actually below the psychological level. The market then comes back for one bar, and then we see the market drive lower, and that's what I was talking about in Friday's market alert as well. If you see the market drive through one of the psychological levels, then it's likely it's going to trade down to the next one as well. We then see prices moving down, and then they come down and have a look at the 17,700 level, but fail to actually take this out on the first attempt. And then see the market coming back down again, and around this time here we're sitting on 65 points. It's Friday afternoon, we're within a whisker of the psychological level, so it wouldn't be a bad thing to actually take the profits off the table here. Alternatively, you can move the stop to break even or to the previous scalp area, which means that you'll be giving up the 50 points in this range here between the two lines, just to see if the market will move lower. The market comes back, starts to move higher. We then get a buy signal that isn't filled, and then we've got an opposing signal as well, but it's already short of the original signal, and then we see prices come down and actually hit that line, and thereby giving the 65 points or more on the actual trade. You can see just at that point 68 points. But as I said earlier, I was out before we actually got into this situation of sitting around and waiting. It's Friday evening, the loss is made up, and there is a profit on the table there. And then of course, no sooner that you actually get out of the market, eventually you see it going down for 100 and plus points there, down just at the peak there at 123 points. But we are at just at the close of trade when the market actually does that, and the spread actually widens to 3 points as well with ETX. So in the daily chart, you can see we've had that down day, we've had up days for weeks, and again, as I mentioned in Fridays, we were due for a down day, and the way to gauge that was purely and simply by looking at how the market responded on the sell side at the psychological levels. If the market drives through, then you can continue lower. If not, then you may want to consider taking the profits. So the market's still showing some weakness. That 17,800 seems to be a bit of a resistance for this market, and if we just move across here, you can see this is where the market moved sharply lower once the market went back to 17,800 before. The market has a memory of this, and that's why you're seeing that bit of weakness there. Let's have a look at today's news, see what we've got. We're all back in sync now, and we've got the ISM manufacturing. This is out at 3 p.m. and then they're wheeling out another Fed member, Williams. He's speaking at 5 p.m, but that doesn't affect us because we don't trade between 4:30 and 6:30, so that's a good time for him to actually come out. That gives the market a chance to react and then find its direction thereafter as well. So let's have a quick look at the implied volatility, see what changes have taken effect there during Friday's session. So the volatility moving up just slightly, 1272, not as much as I thought it would, and there we can see the blue line getting ready to cross the yellow implied line as well. If this gets back below this, then we can see, or likely to see, the sell side improve as well, so you'll get bigger moves on the downside as well. Right, that's it for today. I will see you in tomorrow's market alert. Have a good day. As ever, thanks for your support and also for watching. See you in the next one.